Welcome to this week's Mortgage Insider Update. It is August the 18th, the week of the Federal Reserve members downloading in Jackson Hole, Wyoming. The National or International Economic Symposium. We have all kinds of dignitaries of the economic world coming in to Jackson Hole for lots of speeches, lots of boring speeches. Promise you won't have to listen to any of that. We'll give you an update next week with updates on anything that's said of importance. Fed Chairman Powell will speak on Friday morning. So markets and all the news outlets are talking about that all this week, that what he says typically in this annual meeting is seen as one of the big indicators of the future of their economic policy. A lot of the Fed members have sort of come out and said that it could be appropriate or should potentially be appropriate for a Fed rate cut in September. But we did take a little step back this last week with the producer price index coming in a little hotter, higher in inflation than expected. Consumer price index came in about as expected. So consumers not seeing a big influx in inflation, but the worry continues to be, will tariffs change that in the near future? So let's take a look and see where we stand this week on the interest rate charts. We start this week with the 10-year up slightly, 4.33%. It's up quite a bit from the beginning of last week. Mortgage-backed securities have remained relatively tame, while the 10-year has actually gone a little rogue. So end of last week, after the producer price index came out on Thursday, we saw the break above on Friday, this Fibonacci retracement line day before. So we had the CPI report come out at the beginning of last week, or Tuesday last week, a day of downward moves towards interest rates, and then almost equal move back up, stopping right at that Fibonacci retracement line until Friday, where we broke above it. This is where the markets really started to price in some potential swaying of the likelihood of a Fed rate cut. The market, as far as interest rates are concerned, is going to basically well in advance of any Fed rate cut price in any changes. So we saw big move back on August 1st after the jobs report, starting to price in almost 100% likelihood of a rate cut. This week it's only about 85% likelihood of a rate cut. So we are seeing that in the interest rate charts as we are battling right now another push higher as we start to converge on the 25-day, 50-day, 100-day moving averages. So holding tight here this week before the Fed chairman's speech on Friday could be a positive. That is, if Fed Chairman Powell comes out on Friday and says anything dovish is the term that the economists use. If he hints there could be a rate cut, basically, if that's a door that he leaves open, we could see interest rates come back down to where they were a couple weeks ago. If he comes out hawkish, meaning he's still not convinced, and he wants to make a point of saying that the data is not there for a Fed rate cut, then we could see interest rates move back higher to where they had previously been. Take a quick look on the mortgage-backed security side. Now, mortgage-backed security prices, now these are the price of the bonds that the investors purchase. And as those prices rise, the interest rate falls. So we saw the exact opposite on August 1st. We saw the price rise here, and we got into this window. So even though we saw the 10-year moving kind of below or above the Fibonacci retracement line, we've held pretty steady, but we are flirting with higher interest rates, because if the price drops, the interest rate would go higher. With a little bit less convergence here, the mortgage-backed security prices the investors are willing to pay typically follows what we would use the 10-year treasury for, as like an interest rate barometer. Mortgage-backed security prices have held pretty steady in light of all the news this last week with the consumer price index and producer price index. Won't be any other major reports or anything coming out until the beginning of September. Now we will get jobs reports in September, and right there at the end of the month, the PCE, another Fed really highly watched inflation gauge, personal consumption expenditure, will come out as well. So the last couple weeks of August could be pretty minuscule as far as information until we get into early September. And early September is when the bets will really start to come in on the Fed rate cut, which will take place, their meeting will take place around the 18th of September. So as always, we're keeping an eye on this for you. You come and tune in on our YouTube page and subscribe. I'll give you a quick update each week. Have a great one, and we'll see you next week.